We'll just quickly get into our first corporate interaction of the morning as well. It was quite a strong top-down performance coming in from Kaplan Point in the fourth quarter. The company recorded expanding margins, and not just that, a 67% very strong growth in the US market. In other news, their sterile injectables unit has received 4 observations. We have with us Vivek Parthiban, COO of the company. Vivek, good morning. Thanks for taking the call. Before we talk about what looks like a very strong year and a very strong quarter for you, just want to get this bit out of the way. These 4 observations, I believe they're procedural in nature, but could there be any material impact? What exactly is the FDA saying? Could there be any threat of escalation whatsoever?
No, we strongly feel that these are procedural in nature. And while FDA doesn't exactly consider them as major or minor or anything like that, these are nothing to do with repeat observations or data integrity or anything like that. Obviously, we've not had an inspection in the last 4 years, so we can't expect to have 0 observations at all. But we feel fairly confident, we feel very comfortable that we can respond to these on time and get the EIR out on time as well.
But do they impact your output from this unit in question at all?
No, nothing at all. There is absolutely no material impact, or there is no impact on any sort of revenues that come out of this plant.
Okay, that's great to hear, and I'm sure that's some relief for your shareholders as well. Good morning. I wanted your thoughts on what's happening with the US markets, because the growth has been very strong over there, almost 67% this time, and you've achieved an EBITDA break-even as well, so good on you for that. But can you tell us how many drugs has the company filed in the US so far? What is the run rate in terms of approvals that you're expecting? And given the visibility that you have of a strong order book, what is the kind of revenue run rate that one can expect?
Yeah, so we have, as on date, 23 products that are approved from our site, of which 18 are in Kaplan's name. We have another 8 to 9 products under active review with FDA at this point, and we should be filing another 12 to 13 products, I would say, in the next year to year and a half. Of course, obviously, it was a smaller base, but I think it was very heartening that we were able to achieve overall break-even on the plant at a PAT level. And given our run rate, and also given the approvals that are in place, and also the approvals that we're expecting over the next few quarters, we're expecting to show another at least 50 to 55% growth in the current year as well. So the public information that we've given out is that we're targeting around 300 plus crore in the current year from Kaplan Steroids.
So this 300 plus crore is something that you've spoken about earlier. You're holding on to that target for the US markets, I assume. So what would this mean for FY25? I mean, how can you build on to that? Is this 50% growth something that you can sustain over the next couple of years?
Of course, we don't want to give out too much information on year-on-year numbers. What we feel very confident about is 2 to 3 years hence. I think both our US market and also our parent company getting into the larger markets such as Mexico and some of these places that we are trying to get inside in Southeast Asia can become very interesting for us. I think 26 onwards, we can start to see a lot more momentum. Of course, we are doing well as it is, but for that next quantum level of growth, I think 25, 26 onwards is something that we can all look forward to.
Okay, you're saying that things will pick up after that. Good morning. Just a quick word on what the overall numbers may look like in 24. Revenues in FY23 grew about 15-16%. You did margins of about 30%, right? It came off a little bit as compared to 31% the previous year. What should we expect in FY24?
Yeah, we can expect similar kind of numbers. Of course, we are working off a larger base right now. But what is very important to consider is the fact that the company has grown significantly in how we have increased our cash flows. I mean, if you take the last 10 years, for example, we have grown from a surplus of 17 crore in cash to about 780 crore in cash. And this is despite a capex spend of about 650 crores in the last 10 years. I'm not even taking into account anything on R&D spend or anything like that. And we remain absolutely debt-free, right? And all of our capex expansions going forward, all of our operational expenses going forward also will be met internally. So this is something that we feel very strongly that the company is in a very strong position, and we will continue to grow in the same direction. Of course, when it comes to pharmaceuticals, the gestation period, whether it is regulated markets or semi-regulated markets, always is about 2 to 3 years whenever we enter a new market, right? So I think we need to be patient. But as I said originally, I think 25, 26 onwards, I think we can start to see the next quantum level of growth as well.
Vivek, could you quantify that? So you mentioned FY26 again. I'm getting a feeling that you have a number in mind or growth. Yeah, what? Sorry, go on.
So the public statement that we have made is that by 26 onwards, we expect to, of course, this I said it about a couple of years back. We expect the US market to hit 100 million in revenue in the next 3 years. And we hope to double our overall revenues from 2 years ago. So that's the information we've given now. But absolutely, we'll be more confident when it comes to cash flows and when it comes to remaining debt-free and working through our accruals alone. Yeah.
So FY26, Vivek, you'll do $100 million revenues out of the US? FY26?
The US, that's the target that we've set.
And quantify that number since you gave this guidance out a couple of years ago. Where would revenues be in 26?
You're talking about overall company's revenues?
Overall, yes.
So yeah, like I said, about 2 years ago, I think we were about 1,200 crores or something like that. That's when we said that by 26 onwards, we expect to double our company's revenues. But like I said, this is a dynamic space, right? There's a lot of moving parts. We need to work within our means. We need to expand within our means. We need to make sure that we remain debt-free. All of these things are much more important to the company than the top line per se.
Sure, got that. So you're looking at doubling revenues by FY26, which basically could, take you closer to, let's say, maybe 2,500 crores. Just a question on the utilization of the cash, Vivek, that you mentioned. You did say that you have about 770 crores on the book. I think your capex plan this year is about 500 odd crores, if I'm not mistaken. How will you be utilizing the cash? Will it all go in the capex itself? Would you be looking at inorganic growth? These estimates that you've given us, I'm assuming all of this is just organic growth that you're talking about as of now.
Correct. So we're looking at only organic growth at this point. And of course, we like to remain comfortable. We like to remain, debt-free. We want to make sure that all of our capex, and of course, you need to also take into account that, some of these facilities that we're building will also start to incur OPEX in the next year or so. So we want to live within our means, and we remain fairly confident that we will be adding to the reserves as well, despite spending significantly on capex in the next 1 or 2 years. But at the same time, we will also not be against having some inorganic expansion if that presents itself. But it needs to fit in with our line of growth. It needs to fit in with our expansion areas and something that we are comfortable with as well. So we don't want to bite off more than we can chew. We already have quite a bit on our plate and we are moving in the right direction. We just want to make sure that we are ready for any sort of opportunity that presents itself.
Anything in your line of sight right now, inorganic, Vivek?
Nothing very large. It could be something small by way of an acquisition of API plant or something that presents itself, but nothing large.
This year? Okay, but API plant perhaps this year?
We are still discussing. I will give you some news as and when I have any.
Sure. Okay, and this 550 crores of capex that you have planned, right? Would that put any pressure on your debt? I mean, are you planning to raise debt anytime soon, or will it be largely funded through internal accruals?
No, we have no debt on our books at all as it stands, and we have about 770 crore of cash. We continue to add 200 to 300 crores of cash every year. So considering that, we will very easily be able to complete all of our capex and ongoing OPEX as well for projects. Yeah.
Vivek, good luck. Thank you very much for your time here on CNBC TV 18. We'll take a quick break here. Gurmeet is with us, and there is so much to discuss on the markets. We'll leave you with the SGX and how that is doing. 12 minutes to go for the pre-open session. We're back.